I'm about to show you how to triple your wealth in 2020 through real estate. This video is all about how to get pre-approved for a mortgage, which is the first step that you need to take in order to buy a house. Before we jump into the video, I need you to go subscribe if you haven't done that already. That's really important so that you guys do not miss a single piece of content, because I'm finna fill you up with everything you need to know about buying a house in 2020. Okay, so getting pre-approved for your mortgage. That's step one when it comes to buying a house. You can't write an offer, you can't find a realtor, you can't do anything if you don't first have your pre-approval. Some call it proof of funds. So step one in order to get pre-approved is to find a lender. This is actually the easiest part. All you gotta do is just pick up your phone and call every bank you know. Call if you have a Wells Fargo account, call Wells Fargo. Bank of America, call Bank of America. All of your credit card companies, call them. If you are a military veteran or active duty, get in touch with USAA or Navy Federal. Get in contact with as many different lenders as you can to see who can give you the best rates on a pre-approval. Now, they're going to require a few things before actually approving you. The first thing that they're going to want to see is your bank statements. They're going to want to see how much money comes into your account and how much money leaves your account every single month. You're going to typically have to submit up to 6 months of bank statements. The second thing that they're going to want are your paycheck stubs. Typically 2 months worth of paycheck stubs. So if you get paid every 2 weeks, you're going to need 3 to 4 paycheck stubs. If you get paid every week, you're going to need 6 to 8 paycheck stubs. And they're just going to take this information and come up with an average that you make per month. And that's going to determine how much home you can afford. Third thing is your W-2s. You're going to need your W-2s from the past 2 years. So if you're buying a house in 2020, you're going to need your W-2s from 2019 and your W-2 from 2018. This is super easy to get. Typically, you can go through ADP, fill out the information, log in, create an account, and you can get your paycheck stubs and your W-2s from there. Next thing is your tax returns. The lender is going to want to see 2 years of tax returns. If you're buying a house in 2020, they're going to want to see your tax return from 2019, and they're going to want to see your tax return from 2018. Hopefully, you still have this information. When you do your taxes, you're supposed to hold on to it for at least 7 years before you can trash it. The last thing that they're going to want to see is your end of year paycheck stub. They're going to want to see how much money you made in that entire year. And that can be a lot different from your paycheck stubs, because a lot of times people get yearly bonuses or you may get commissions, and there's just a lot of different factors that you can't always take your bank statements, or you can't always take your paycheck stubs for the month and multiply that by 12. Usually that's not accurate for what someone makes in a year. Typically it's more than that in most cases. Those are the pretty baseline requirements that you're going to need when it comes to getting pre-approved for a mortgage. The next thing I'm going to tell you guys about is just some tips so that you can ensure that you get your pre-approval, you get approved for the most amount of money, and how to get the best interest rate. So the first thing that you want to do is actually shop your credit around. You want to shop your pre-approval around. For example, let's say you get pre-approved through Wells Fargo. You send all of your documents and they send you a pre-approval. Understand that they are going to run your credit. Now, what most people don't know is that you can have your credit ran for a mortgage as many times as you want in a 14-day period without it affecting your credit score. That is because these credit bureaus and these lenders know that people are going to shop their credit around for the best interest rates. So don't fear getting your credit ran. Be like, I don't want this to hit my credit, then the next lender to hit my credit, and the next lender to hit my credit. If you do it all within a 14-day period, sometimes it's 30 days, but on average it's 14 days. So you can go to Wells Fargo, Bank of America, USAA, Navy Federal, Chase, Capital One, and shop your credit around. So what I mean by that is, let's say you go to Wells Fargo and they give you $250,000 at a 4% interest rate. You take that pre-approval and then you show it to Chase Bank. And then Chase might say, well, we want to give you $250,000 for a 3.8% interest rate. Then you take that from Chase and you go to Capital One. Capital One might say, well, we want to give you $250,000 for a 3.5% interest rate. And essentially what that's called is shopping your credit. You're pretty much taking your pre-approval and you're taking that same pre-approval letter, that first pre-approval letter, and getting a better one. Then a company is going to want to beat that because they want your business. So they might give you something better than that. And then the next company might give you something better than that. This is exactly what I did when I got pre-approved. Originally, I started with Wells Fargo. They gave me $200,000 at a, I want to say 4.5% interest rate. I shopped that around, and by the end of the 14-day period, I had that same loan amount, but guess at what percentage? 2.875. The second tip that I want you to know is you have to know what type of loan you actually are looking for, whether that's a conventional loan. Conventional loans, you can typically get in with as little as 3% down. An FHA loan. A FHA loan is typically for first-time home buyers. You have to actually live in the home, and it's for people with lower credit scores. And you typically need less money down, around 3.5%. Whether you're getting approved for a VA loan, this is a veteran's loan for active and veteran military personnel. You guys can actually get approved with $0 down. Whether you're buying an investment property. In investment property scenarios, typically you have to put 20% down if you're not actually living in the home. So what that means is if you're buying a house for $200,000, you'll have to actually bring $40,000 to the closing table. Not in cash in a duffel bag, of course, $40,000 in your bank account. It's definitely important to know exactly what type of loan you're looking to get. Reach out to your favorite Keller Williams realtor, and that person will sit down with you and really help you understand what you should be looking for. And the next thing that you want to do, the next tip that I want to give you guys, is to have cash reserves. They say you want to have about 3 months of cash reserves in your bank account. This is not including your down payment and not including your closing costs. This is just money that you want to have on top of that. This will also help you get pre-approved. Now, what lenders look at when pre-approving you is your debt to income ratio. This is the primary thing. Now, I actually just talked to a mortgage lender, and she told me that the ideal debt to income ratio is 41% or less. What that means is they look at how much debts you pay in a month. So that'll be your credit cards, your student loans, your car payment, and then they take that and they make a ratio of how much money you actually make in a month. So as long as your debt to income ratio is below 41%, you should be good when it comes to getting approved for a mortgage. A tip to lower your debt to income ratio: increase your income or to lower your debts. I say try to go for both. How do I do this, you may ask? The first thing, let's talk about increasing your income. Start a side hustle. Pick up a new job. Drive Uber. If you already have a house, rent out a room on Airbnb. There are a lot of different ways, a lot of different side hustles where you can make money. If you know you are searching for a home within the next month or 2 months or 6 months, start looking for additional income streams. Now, I know sometimes it may be hard juggling a full-time career. You may have kids. Your kids may be in extracurricular activities like football or dance or basketball or cheerleading. But if you know you're about to be searching for a house, it's important that you get that debt to income ratio as low as possible so that you can get the most house that you absolutely can. It's just important that you increase your income. The next thing you want to do is lower your debts. So what you can do with that increased income that you're now making is take that and put it towards your debts. You want to pay off your credit cards, pay off your car notes. Side note, student loans, there are ways to get that factored to not be into your actual debt to income ratio, but get with a realtor and they'll walk you through that. But essentially, you want to take that extra income that you're making and put it straight into those debts. So now essentially what you've done is not only increased your income, but you've also lowered your debt all in one little night job, or in one little weekend job, or driving a couple trips on Uber or Lyft. So now that you're pre-approved, I want you to take that pre-approval and I want you to go ahead and send it to your realtor so that they can begin the home search for you. My next video is gonna be about how to actually find a realtor that's good for you. So if you guys can go ahead and subscribe so that you don't miss any content that I'm about to put out. I'm about to give you guys a whole lot of information that I've learned in my journey as a realtor, a real estate investor. If you guys enjoyed this video, give it a quick thumbs up. Be sure to subscribe. It's very important so that you don't miss the latest content that I upload, because I'm about to show you how to triple your wealth in 2020 through real estate. Talk to you on the next one. Peace.